can I incorporate tax loss harvesting into my investment plan to reduce tax liabilities during volatile market conditions?
Okay, that's actually a great question. I kind of started this saying that, we're talking about, investments across the board, but I feel like I kind of honed in on 401ks because that's what we do a lot of business with, those that are retiring. So tax loss harvesting in 401k doesn't matter. Tax loss harvesting, so those of you that don't know what it is, it's the ability to kind of save taxes by harvesting your losses in a brokerage account. So let's take that same example. I think you said it was $500,000. Let's assume maybe a husband and wife has saved that over time and they've got that in their brokerage account. And maybe what's happened is throughout the course of the last year or last couple of years, they've got some winners and some losers in there. And instead of just going in there and having the taxes continue to generate off of that because of the capital gains or dividends getting paid out, they might go in there and say, okay, look, I've got $20,000 worth of losses in these accounts that some that I bad picks or maybe just hasn't gone well, and I don't like those anymore. But or I don't like those anymore, but I do like the sector and I want to make sure I'm in there. So I might have, fund ABC that's got a $10,000 loss. I'll sell that. I will harvest that loss to offset any other gains I may have for the year. But I may go back and actually buy fund XYZ, which really does the exact same thing as fund ABC. Now you can't do that with a specific stock and go from one to the other. So you can't sell Tesla and buy Tesla back. You have to wait 30 days to do something like that. But if we're talking about ETFs or funds, there's usually multiple choices that do the exact same thing as what your one is. So if you have more questions on that, give us a call because it can get more complicated. You want to make sure that the tail doesn't wag the dog. You don't want to use taxes as an overall decision making tool. You still want to look at the overall investment strategy there. But generally speaking, selling losses, harvesting them to offset your gains in current years. Now, if you don't offset all of them in the current year, you can carry forward $3,000 to your income taxes and then carry forward that loss against others in the future.